What's the pros and cons between maybe just going the traditional buy and hold single family, multifamily route versus a syndication?
Yeah, for sure. I'll just say when I talk to this, it's not that I don't believe in long-term purchases.
Yeah.
So definitely not saying that at all. But the advantages to coming into a syndication, one, it's a much larger, much faster return.
Yeah.
So we're building and then selling.
Right.
In times like this where inflation's high, prices are high, interest rates are a little bit high, sometimes the numbers don't make as much sense and you don't have a net positive return. You certainly can't expect a large return like we had a couple years ago where we had 20 to 40% appreciation in a year.
That not sustainable.
Exactly. That's not typical. So with a syndication model like this, we can expect, depending on the project, 1 to 4 years where you have a substantial cash and cash return. The main benefit, in my opinion, is larger and a little bit quicker return rather than slow growth or slow cash flow buildup.
Yep.
And then the other pieces is it truly is 100% passive. So everyone's looking for passive income. And long-term rentals or short-term rentals certainly are more passive than working a job, but they are not 100% passive. You still are making decisions. There's good months, there's bad months. There is some management involved, even with a property management company. Whereas with a syndication, it is truly a hands-off investment.
Yeah.
Where as long as you're trusting the project that the money's being deployed into, you sit back and just watch and wait and collect a check.
All right, what's up, guys? Bryce Gonzer back with another episode of the Wealth Blueprint today. Very special guest, good friend of mine, a man that needs no introduction, but I'm going to give him one anyway, Jesse Taff. So, Jesse, good to see you, man. It's been a busy last couple 48 hours for us. It's might as well just start sleeping here because we're going to be here for a while. But thanks for jumping on, man. Jesse and I met back in 2019, I believe, is when I first kind of got into lending. But yeah, go back quite a ways, and a lot of deals done, between us, and exciting episode because we're gonna be talking about a lot of stuff that we've gotten interest in, through our social media accounts. What else that we're doing? But take some time, kind of introduce how'd you get into real estate? Where are you from? A lot of people don't know that, so give us some background on that.
Yeah. I'll try and keep it short. So from Washington originally, moved out here to Boise to go to Boise State. Been here for 13 years now. The second I moved here, fell in love, and it has everything that I could possibly want in a town to live in. So
whereabouts in Washington?
Born in Seattle, grew up mostly in Spokane.
Gotcha.
So not too far from here. And went to Boise State, go Broncos. Got my engineering degree, so my background's engineering. Worked in that field for several years. Worked at Micron, worked at another local semiconductor company, and as I progressed in that career path, I realized it's not everything that I really wanted in life. So started to transition out of engineering and more into business. Dabbled with dozens of side ventures, purchased a cleaning company, still run that, and another one. And then real estate had always been top of mind, mostly from an investment perspective. And as I started to dive into that further, I realized being a real estate agent was almost the ideal entrepreneurial venture that I could even draw up. So got licensed, took an entire year to run and grow my real estate business. I was a full-time engineer, still running my cleaning company, and then after that year, I kind of just went for it and realized, this is everything I'm looking for, and business is going good. So
make the jump.
Yep, exactly.
I like that. Do you think having that engineer background gives you a leg up as a real estate agent? Because I don't know. I think you are the only agent I know with that engineering background. Oftentimes, the two don't mix.
Exactly. Yeah.
So you think it gives you a leg up? What's your thoughts on that?
Yep. I would say, just like you said, not too many of us come from engineering and then into real estate, and there are a few, but not too common. And I would say, in some aspects, it definitely gives me a leg up, and more from the analytical and problem solving side. So numbers for sure, that's a specialty for myself and engineers, but really the entire engineering program and discipline is all about problem solving, which can be translated into more than just a mathematical or physical physics type problem. It can be translated into life with clients, and negotiating all those things. So that has definitely helped out my business and myself stand apart.
Yeah, well, you're very good at it, and I can not only testify to that for just being the lender on the transactions that we're in, and watching you do your due diligence with clients and work with builders and stuff like that, but also as my business partner on the ventures that we're in when it comes down to breaking down those numbers. So it's a well put together skill set. You're very good at it. So that being said, there's been a lot of interest. I know I've gotten multiple messages. You've gotten multiple messages. This is going to be kind of more of a story to just kind of tell people, because we both know the story already. So it's not going to be like asking, set up questions. But talking about this GT Investment Group fund, right? Talking about syndications. This is a topic that I think a lot of people are interested in doing. But, to be honest, there's not a lot of information out there, to be learned, right? It's kind of you might have heard of a syndication, you might not. But there's a lot of kind of hype around it, and I'm excited to kind of share what we've done. Before we even started to partner up back in 2021 on syndications, how did you know, or why did you want to eventually move into that development type space? What was it about the space that was like, okay, real estate's awesome, but I want to transition more into this world?
Yeah, exactly. So a couple points to that question, and one of them being out here in the Treasure Valley, new construction and development is just a huge piece of our volume and activity for real estate. So part of it was, as an agent, I want to go towards where more business can be found, and that is new construction and development. But on top of that, and this is where I think you and I connected now and continue to connect as business partners, is how can we take our lives and careers to the next level?
Yeah.
We can continue to grow as yourself a loan officer, as myself a real estate agent, but what's the next step? And that next step is working on larger projects and investments. And in terms of real estate, that would be, in my opinion, developing and building, whether it's residential or commercial. So those were the two drivers to why over the last really 3 or so years have been very focused on educating myself and networking within development and new construction realm. Yeah,
no, I'm the same way, and it kind of puts us at our starting point of this story, where in 2021 I was helping run Modern Lending, so I was commuting back and forth from California, right? And that's when I was able to obtain, if you remember that PDF, of basically how to create, your own private equity firm, right? It was tailored more towards commercial. And so I remember, give me goosebumps talking about going into Boise Premier and sitting down with you and saying, hey, what do you think about this? And sending it to you. And I think we were, after you went through it, it's like, man, this is what you had been thinking about for some time. It was what I was thinking about. So it's just like the stars align. Let's go and do it. And so it was a phenomenal PDF, again, on syndications, but it was geared more towards the commercial space. And that's where we started. And a lot of people don't know that we went down that route, and it didn't work out well.
Sure. Yeah. We were looking at, like you said, commercial buildings, car washes, retail, office space, all the above. And we even sent a few offers out on some properties. And we, through experience, came to realize the development, maybe single family or multifamily side, was more up our wheelhouse. And we also realized too, at least locally, it was a more prime opportunity to go that route than purchase existing commercial properties.
Yeah. What a lot of people don't know, we looked at several. I remember multiple nights. On some of we looked at a gas station. There was an old building over by St. Al's. I remember driving to those buildings at night just to look at them, and going through the numbers. It was exciting. But one of the things that we ultimately came to the conclusion of is, when you're purchasing a car wash, when you're purchasing a gas station, a lot of people, I think from the outside looking in, think that's a good investment, and there's no doubt about it. If you can get your hands on a car wash on a gas station, if it's in the right location, it's the right setup, you can cash flow a lot of money. But what I think oftentimes gets overlooked is that you're not only buying the commercial building, you're buying the business, and you have to operate the business as well. And with how busy we are running a team, running a brokerage, in the real estate world, we don't also have time to buy a commercial building and then run that business as well. And I think that was something that we were like, we need to shift our focus into something where we can still manage it,
Yep.
but we don't have to actually run a business in order for us to profit.
Yep, exactly. And to, maybe later on through the podcast, or we'll avoid just numbers in general, but the other piece that we came to realize too is for a lot of individuals that don't necessarily have a huge stockpile of cash to go make more cash with, some of these long-term holds are slow incremental cash flow and not necessarily a large lump sum return, which right now, a lot of our sphere and network, that's more what we're interested in is let's build something, develop something, have a much larger total return,
right,
and then go use that capital to go purchase and hold long-term investments.
Exactly. So through networking, through partners that I had, that you had, that are already in the real estate world, we found ourselves going in 2021 and landing our first single asset syndication. Now, let's give a brief description to the audience of what a syndication is, because although it's not something that we invented or came up with, it's relatively new. And most people are familiar with the traditional debt stack of, hey, if I want to go buy a house or if I want to go buy a building or something like that, if it's maybe 1 to 4 units, I can go 5% down. I can borrow or leverage 95%. If it's a commercial building, maybe I'm coming up with the 25% and the bank's giving me the rest. But as that building gets bigger, as that development gets bigger, it's really hard for somebody to come up with that 25, 30, 40% down. So in your own words, break down briefly, what is a syndication? Like, what are we doing?
Yeah, exactly. So very high level, syndication is bringing on or pooling together a group, whether it's 1 or 5, a group of individual investors using their capital to go acquire and run and complete a project, whether it's buying a building and renting it out or buying a piece of land and developing and selling it. So again, it's pooling together a group of investors.
Yep.
And then the reasoning why, like you said, it's such a valuable tool lately, and it's not brand new, it's just becoming more knowledgeable or more public, is because everything is more expensive now. I mean, 20 years ago, the same commercial building was probably half the cost or less.
Correct.
So you need a significant more amount of capital, and then also, lost my train of thought.
No worries.
But anyway, so in a nutshell, syndications, like I said, are pooling together a group of investors instead of having one individual have to come up with all the capital themselves.
Exactly. And for those listening, like, you can imagine the traditional debt stack, you can just call it 75%. So imagine like a rectangle, right, where the bottom half is 75%, and the equity is the top half of 25%, right? All we're doing, Jesse and I, is we're condensing that 25% that, Jesse and I might have to come up with into maybe only 3%. And we're bringing in the additional, 22, 23% in as limited partners, as capital investors to shrink, how much we have to come to the table with. And it's a great way to get started within commercial, within development space, because oftentimes those up-and-comers not going to have that 25% down.
Yeah, exactly. And that's actually where my train of thought got left off, was for those that are running or creating the syndication or managing the syndication, there is an extreme amount of value in finding the right deals, and that's where the two of us or anyone similar to us can come in with little to no capital into a deal, but still go take down $1 million or multi-million-dollar project with other people's capital. And it's because the value of finding that project, and then in our case, sweat equity of running the project, is worthwhile to bring on capital and obviously have a pretty high or a solid return for the investors as well as the people managing it.
For sure. And I want to, that's going to kind of go into our Emmett project, which you were the one that came up with and found that one off market. So I want to go into that. But I've talked about it before on some of my posts. There's projects like our Emmett project, which is kind of a unicorn. It's kind of a diamond in the rough type deal. But these projects exist in Idaho. But it depends on you, if you're really wanting to go this route, to network within that, into this, to this world, right? You have to know real estate agents. You have to know people that are constantly coming up against, land to purchase, land owners, et cetera. And it's something to kind of piggyback off what you said is, if you're able to move money, right? If you're able to construct money across different times, so across different states, across different nations, that pays money,
Yep.
right? So if you can come up with a deal and then you can formulate and bring and pool in the money, you will get paid to do so,
Yep.
even if you're not putting any money into the deal, right? So that syndication route is very lucrative from that
Yep.
standpoint. Talk us through. This is always a cool story. How do we get the Emmett property?
Yeah, exactly. So to take it one step back, just like you said, there's the value in finding the project is huge, and that's where we come into play. So
Yeah.
a lot of times we talk with people in our network or even potential investors, and they're like, well, if I have this money, why don't I just go do this and make all the return? It's like, okay, you can do that. Anyone potentially could do that, but it's going to take you several years to get to this point, just like we've done. So
Right.
we've already put in that time and effort, and now we are able to find and confidently underwrite projects that we're looking at.
Right.
But as far as Emmett goes, so yeah, it was again just purely connection based, which is what real estate's pretty much all about.
Yep. Off-market deal.
Exactly. Yep. Have some connections. They had seen some projects and were talking with the previous owner, and they were interested in selling, and they knew that myself and Bryce were looking for projects around this size here locally, and they brought it to our attention. And yeah, we ran the numbers and everything looked good, and we said, yeah, we're committed. Let's put it under contract and either pool the money between ourselves and our third partner.
Yep.
Take it down, and then go develop it with outside capital investors.
Yeah, and that's exactly what we did. Off-market deal, owner carry on the note.
Yep,
Like
yep.
all the things that are exciting. A lot of people hear about, like on Bigger Pockets and stuff like that. Like, man, I just wish I could find that deal.
Yeah.
That happened in Emmett, Idaho.
Exactly.
Right, and so those deals are out there.
Yep.
And you just have to be able to go and find them, network, and it's got to be something you put your full attention into doing. Otherwise, it's just not going to happen.
Yep.
Just like anything else. Right?
Exactly. Or if you're not in this real estate space or have the time or wherewithal to do that, that's where people like us come into play, and that's how we open up some of these projects to outside people and outside investors, because we are putting in the time to go find these unicorns per se.
Yeah.
So if anyone wants to be a part of them, that's where you reach out to people like us or other local syndicators.
Exactly. Bring us in on the deal, and we'll help you conquer this thing, because we've been there, kind of done that.
Mm-hmm.
But I'm excited. The Emmett project is gone well. It was 16 acres out there, had a beautiful view almost in every direction you're looking. You're looking at a mountain.
Mm-hmm.
10 single-family homes ranging between 1.25 to 2.5 or 2.25 acre lots.
Yes, correct. Yep.
So yeah, we're excited. That should be all wrapped up this year.
Yeah,
and
yep.
kind of move on to our next one. Throughout this process, we were able to meet a very skilled syndicator and a skilled developer. We'll leave his name out. But again, it comes through connections, right?
Yep.
It comes from knowing people, just asking questions and meeting people with really no intention of just meeting them. And
Yep.
I think sometimes people, try to come off as too salesy, or, there's always a objective other than information is value,
Yep.
right? And if you can get information, if you can get somebody that has done what you're doing at a much higher scale,
Mm-hmm.
and we can use that information for what we're trying to do, that alone is worth, some type of coaching session, paying money for, right?
Yep.
But it goes even a step further, where that individual sees you as like a younger version of them, and they want to mentor you.
Yeah,
Right.
yep.
And that's ultimately, we were very fortunate to have that happen with us.
Yeah, exactly. And like you said, it's not even just being able to meet these individuals. It's also showing that, one, we're extremely interested in learning from them, but also willing and verbally, truly offering what can we do to help you. And that, I think we, after almost every one of our calls with some of these partners, it's, this is great, everything's going well. What else can Bryce and I do to help you? Like, what else can we take over and help out with?
Yep.
And that type of stuff goes a long way. It's like you said, it's not just making this connection. It's how do we provide value back?
Yep.
Because we already know we're going to get value from some of these
No matter
connections,
what, right.
at least in just knowledge.
Exactly. So going through the timeline really quick, we had the Emmett project. There was another project that popped up that we were very fortunate to take down. That was 2 lots in Boise, right off of State Street, Pierce Park, right over there by the golf course. So 2 single-family homes right in there next to the middle school. and those will be done this year as well. So vertically built right now, putting in windows as we speak, and hopefully be done here come springtime and move those off and on to the next project. So.
Yeah, exactly. I mean, we looking back, very, very exciting that we were able to find some amazing projects that were attainable for essentially just starting out as individual, like you said, single asset syndicators. So yeah, both projects were right in our wheelhouse. It gave us a ton of experience on the ground up horizontal development as well as vertical development, so building the homes. And we have a ton of people around us to help guide and mentor us, and these were the first two, most likely of many, that kind of laid the foundation for the business that we're running right now.
Exactly. And it's funny because those those were shovel ready lots, and it just again, off market deal. Somebody fell out of contract, we picked them up. It was just the perfect timing. So it was about knowing the right people.
Yeah.
From there, our mindset changed because we ultimately realized that single asset syndication is difficult, and the reason being is that you're constantly trying to pull together money when you find a project. We find a project, hey, we have 30 days, we got 45 days to close. It's like, oh shoot, we got to go round up, $500,000, $1 million plus. It's like, it's too difficult to be constantly doing that. Why don't we switch our model to a fund, right? And that's ultimately what we ended up doing. GT Investment Fund is now a registered fund with the SEC where we can onboard capital and we can deploy capital into different development projects. We are looking for recession-proof type builds where we're coming in as either the developer or the developer and builder to take advantage of up-and-coming markets. And our next project that I'm excited to kind of talk about that we've gotten a lot of questions on is definitely a heck of a lot bigger than 16 acres in Emmett or 2 single-family homes in Boise.
I would say it's we're very, very humble in what we do, but also confident in our abilities. But it was one big jump or one big step up from where the projects we have locally to where we're moving into next.
Yeah. Why South Dakota? That's a question that I get, oftentimes. Like we went to South Dakota numerous times last year. Prior to going, didn't know what to expect. I was envisioning, some kind of podunk town, super cold, just, flat plains or something like that. But to our surprise, wasn't like that. It really, truly, before I found out about all the growth, before I found out about all the government contracts and everything that was going to be happening, it truly reminded me of this area a decade ago, or when I was growing up, here in Boise, and it was crazy to see that again. And as we went over there, the locations of our projects are located within Rapid City and Box Elder. Come to find out, Rapid City and Box Elder, about 9 miles apart, but they're located in Pennington County. And Pennington County is one of the fastest growing cities in the Midwest, if not the fastest, and they're top 10 in the nation right now. So there's been a ton of growth that's occurred over there throughout this COVID pandemic. And as we move into this next phase of whatever the 2020s are going to allow for us, I'm excited to see what's going on. So give us a quick breakdown, Jess. Like we have a pretty exciting project over here. And obviously, not going to talk specific numbers, nor can we, but for anybody that wants additional information after this, please feel free to hit us up. We want to talk to you guys, go over what our fund is able to offer within this project.
Yeah, exactly. So like you said, why South Dakota? And there's a lot of pieces to that answer, but our first trip over there, I'm a very optimistic person, but also a realist. So our first trip into there, I was coming in with a little bit of skepticism as to the size of this project, what's going on, and would it really be an area that I can see people moving to, or even myself moving to? And when we got there and spent a few nights, was surprised by all of it. It looks beautiful. It's very similar to Idaho.
Very.
The Black Hills Forest is pretty much adjacent to Rapid City.
Right.
There's obviously the massive tourism with Mount Rushmore, Sturgis, again Black Hills, Deadwood. And also, it was just a clean, up-and-coming, already starting to see improvements and developments and growth area. And so it just like Bryce mentioned, it was very reminiscent of Boise 10, give or take 10 years ago. 10 years ago. And that is extremely exciting to me or to us because we've seen what's happened.
Yeah, exactly. And we didn't just we didn't just stumble across this opportunity. We were very fortunate again from our mentor to be presented with this opportunity. And they were over there 2 years prior from us even going over. So it wasn't like, hey, we found this place, let's go, jump over here, and it's we're gonna make a whole bunch of money. No, it was 2 years of nothing happening, no dirt being moved. Just purely research and development. Because what most people probably don't know, or maybe you would assume with South Dakota, a huge chunk of their GDP comes from tourists, right? You have Mount Rushmore, you have the Sturgis Motorcycle Rally, you have Custer State Park, you have all of these amenities. But what do you do after you look at a rock for 45 minutes, right? What do you do when you go to a state park and you look around for a while? Like the average stay is less than 4 days, right? So there needs to be something to keep these people there, and that's where our mentor's background lies within that retail, dining, entertainment, hospitality service, and. We'll be happy to announce some of the cool stuff that is coming, billion-dollar project that is coming to this area to hopefully entice and keep people there. But while they were in this 2-year research and development phase, they quickly realized how much this area was behind on housing, how much they needed housing. And then in 2022, the Biden administration passes the National Defense Authorization Act, and it changes a lot.
Yes,
right?
yep.
And so what happened in 2022 is, like I said, Biden passes a $858 billion defense bill. And this is being allocated across the country. But where a very key component of this project lies is the Ellsworth Air Force Base. So Ellsworth Air Force Base is located in Box Elder, 9 miles away from Rapid City and 5 miles away from the nearest airport. So very close in proximity, right? The Ellsworth Air Force Base has been granted about $1 billion infrastructure bill to go towards this Air Force Base. In 2022, they landed the new B-21 stealth bomber contract. So the next generation of stealth fighters will be operated out of this facility. And there is a ton that is going on within this community surrounding this Air Force Base.
Yep, exactly. And when you get a large contract like that, it's not a 1 or 2 year thing. Typically, these are counted in decades. So this Air Force Base has already been a prominent base for our military across the nation, but it's going to stay that way for many, many years to come now that they're housing, again, the newest generation of our stealth bomber. So part of that bill and part of those funds are obviously going towards infrastructure, but there's going to be continuous growth within that base outside of what's happening right now, which is essentially doubling the size of the base. And usually the cities surrounding an Air Force Base are very military dependent, so when the base itself doubles, you can roughly expect the city around it to double at minimum.
Correct. And I mean, that's what they're doing, a fantastic job. Like we said, guys, Jesse and I have been over there multiple times. We've talked to some of the city officials, and they're very pro-development in this area. Box Elder is on the come up. Again, they're located in the fastest growing area in the Midwest, so it's super exciting. But like Jesse said, this bill is introducing $15 million to go to schools alone in this area to basically support, hey, we're going to need new schools, we're going to need improved schools, we're going to need to be staffing for all of the military personnel and their kids that, unfortunately, they have no choice. There is going to be over, easily thousands and thousands and thousands of new airmen coming in, DoD civilian contractors coming in. A lot of movement is coming to this space, and housing, unfortunately, is behind thousands of units to be able to house these people. And so that's where our opportunity ultimately lies.
Yep, exactly. Yeah, it was behind before this bill was announced. Just like housing across the U.S. is still behind. And then you throw on you throw fuel on the fire and double the Air Force Base in size. So now
people are scrambling.
It's a very severe problem right now, and the city knows it. And they're very vocal with us directly on wanting a large professionally planned and developed project to come out and support this growth, not just with housing, but also amenities for the people living there.
Exactly. And so while our mentor and partner was over here working on this massive build out in the hospitality space, we were able to partner up and take advantage of basically a master plan community within Box Elder. So it started off as a massive project, and it's only gotten bigger. So it started off, we were able to lock up 640 acres, which is 1 square mile of basically bare land, for the most part, located in Box Elder, minutes away from the Air Force Base, 9 miles away from Rapid City, direct, freeway access, prime location. But 640 acres is a lot, and we walked it. We went out there, and I don't think it's hard to fathom just how big that area is, but you cannot see from one end to the other. You have to drive to go see it. So it's a massive, massive project. And so the landowners within this area, they see what we and our partner are coming over here with. They're, like Jesse said, there has never been a master plan concept in South Dakota, whether that's with the commercial space or with the residential space. And we're coming in with, no doubt, as the largest developer in this area, and we're doing both.
Yep, exactly. Yep. So that's where the locals who know and see this project coming, they're excited. The city officials are excited. The landowner themselves are very interested to see how it pans out because they know there's a huge demand for this.
Huge.
But with being that they kind of can control a little bit of that and they know that it's needed, they're also very, very easy to work with. And that's where, unlike some of the projects here locally or in states that have already had their hyper growth period, the landowners in this area of South Dakota are willing and ready to partner and willing and ready to negotiate to make it worthwhile for us as the developer as well as them as the landowner. So it's a very much a win-win situation where a lot of the projects that we've been seeing in other areas, some here locally, we don't have as much say as the buyer and developer, and the landowner, wants their exit now at a very premium price, and that's as far as the negotiations go.
Correct. Yeah. No, they've been great to work with. Very different feel from what you would see in California or here even in Idaho, like you said, where, hey, I got land, you want it, you're going to buy me full price, and I'm going to get out. Whereas here, we have this locked up, on this land option agreement, which is a blessing because what this allows us to do is we can incrementally take down 80 acres, 160 acres at a time in this project, and we don't have to flood the market with inventory, right? As we know, still across the nation, although we've had a liquidity, crisis, drawback, whatever you want to call it, throughout 2022, housing is still short. Housing is still millions of units lower than it was in 2008. In this area specifically, where there is growth continuing, on average, anywhere between 2 to 3% higher. Double the growth rate of the national average. Like, people are coming here, and we need housing. And so this 640 acres just recently turned into 900 acres with another landowner adjacent to us coming into the project. And what this project is going to entail, guys, is it's a complete master plan community, right? So we have single family. We were just recently approached by the school district for allocating some of this $15 million bill to potentially have a school in our community, which is awesome. There's a high school nearby, but having a school within this community would just be, kind of next level. It's going to include multifamily, small commercial retail spots, dining. So basically, if you can kind of imagine, a smaller version of the village combined with single family housing, is kind of what the deck looks like. It's in a very exciting project. And again, the local officials are excited to finally have somebody coming in here with that master plan concept to design this infrastructure, this massive build out, instead of, hey, a couple hundred homes here, a couple homes here, maybe a couple shops there. It's the entire thing. Right?
Exactly. Yeah. And I mean, even for us, it can seem and sound overwhelming to kind of grasp the entire picture of the project, but that's where we are very, again, confident in our skills and knowledge, but we also have the backing of people who have done, not exactly the same thing, but have done things to this size or even larger. So
in the billions.
Exactly.
In the billions of work and development across the globe. So we're very, very, blessed, honored to be working with these individuals. And that's where our true backing lies, within our fund, is we have the backings of a 3-decade-long company that's done billions of dollars in real estate development across the world.
Exactly. So a lot of big change over the last couple of years from, like you said, the 16 acres out in Emmett, the 2 homes under construction right now here in Boise, stepping into what could be a 10 to 15 year total project and build out, where we're essentially building an entire town almost.
And South Dakota is doing it right. there's a lot that they're doing that is attracting growth outside of just the Ellsworth Air Force Base. You know, they're a huge medical hub over there.
Yep.
They're also one of only 9 states in the nation that have no state income tax or corporation business tax as well. So the people that live in South Dakota take 100% of their paycheck home. Also, for Social Security for retired people, they're not taking that Social Security tax out of there.
Mm-hmm.
So there's a clearly an incentive for not only individuals but businesses to move over to this area, and we're seeing that unfold with the massive growth that we've had since 2020 onward.
Yep, exactly. Yeah, it's a lot of, like you said, incentives, a lot of reasons to move out there. Just like there have been a lot of reasons to move to Idaho and move to Montana. The migration patterns we're still seeing continue, where it's kind of big city to smaller city to slightly smaller city, where you get a little bit slower pace of life, you get a little bit larger, property per se, and a little lower cost of living, and that's where we're seeing South Dakota growing, not just from the military side, but growing from people choosing to go move and live in this region.
Yep, absolutely. Jess, really quick, give us some pros and cons between, a lot of people, especially here that we talk to, man, they're looking for an investment property right now, right? Or they're, looking to do something like that. What's the pros and cons between maybe just going the traditional buy and hold single-family, multifamily route versus a syndication?
Yeah, for sure. And I'll before I step in, I'll just say, when I talk to this, it's not that I don't believe in long-term purchases.
Yeah,
or
we
buy
both
and
have
hold.
them. So
Exactly.
yeah.
So definitely not saying that at all. But the advantages to coming into a syndication, and we've talked a little bit about it, is one, it's a much larger, much faster return.
Yeah.
So we're building and then selling. So it's not hold it for 10, 15, 20 years and then get your cash back out. So in times like this, where inflation's high and prices are high, interest rates are a little bit high, sometimes the numbers don't make as much sense, and you don't have a net positive return, and you certainly can't expect a large return like we had a couple years ago, where we had 20 to 40% appreciation in a year. That
not sustainable.
Exactly. That's not typical. So with a syndication model like this, we can expect, depending on the project, 1 to 4 years where you have a substantial cash and cash return, and then you can go either deploy it into another syndication, or go use that to go buy a long-term hold.
Yep.
So the benefits, the main benefit in my opinion is larger and a little bit quicker return, rather than a slow growth or slow cash flow buildup.
Yep.
And then the other pieces is it truly is 100% passive. So everyone's looking for passive income. I mean, that's been a key word for several years now. And long-term rentals or short-term rentals certainly are more passive than working a job, but they are not 100% passive.
Yeah.
You still are making decisions. There's good months, there's bad months. There is some management involved, even with a property management company, whereas with a syndication, it is truly a hands-off investment, where as long as you're trusting who you're investing in, the company you're investing with, and the project that the money's being deployed into, you sit back and just watch and wait and collect a check, whether it's 1 year, 2 years, or 4 years down the road.
Correct. Yeah, absolutely. And some people want to be more hands-on, so sometimes that syndication route is not the preferred way to go. Obviously, there's very few ways that somebody that is not an accredited investor can actually be part of something like this. And that's something that me and you decided when setting up this fund. It was time consuming, it was expensive, but we knew that coming back here to where we live, that we wanted to include the people that are communicating with us over social media. They are backing us, and so we wanted to give that opportunity, right? And so the way that we started this fund is with a 506B offering, right? And so what that allows people to do is we can take on 35 non-accredited investors, and there's very few opportunities that you can actually get exposure to a project of this size, of this caliber, national headline turning news without a syndication. And that's something that at the end of the day, that investor has to be, there's pros and cons to everything, but a syndication like this is one of the truly only ways that you can see a project like that.
Yeah, exactly. So, and actually the one other big pro for syndications, which a lot of people don't think about, especially because we've had a really, really good market since 2009, maybe more like 2012, essentially.
Yeah, I would agree.
is you don't go into debt.
Yeah.
So debt is an extremely powerful vehicle to create wealth. So leveraging debt, 10% down payment, and then you finance 90% or
Yep.
20, whatever the numbers are. But you are still liable for that amount, whether you end up having to give up the property or pay it off, directly. So with a syndication, you are not going into debt. So if you have a $100,000 investment, there is no liability for the remainder $300,000, let's say on a $400,000 home, that you are still owing
On the line for.
Exactly.
Yep.
So there is no debt. So for those that are truly risk adverse, again, most people haven't really thought about what happens when you do go purchase an investment property. Sure, you're only investing, let's say, $100,000 into it, but you do still owe the full $400,000 or $500,000 of what you're purchasing it at.
Good point. Great point.
And then again, back to the accredited, offering this up to a small amount of non-accredited investors, being able to come into and take advantage or be a part of a project this large is certainly very, very rare for non-accredited investors, but even so, it's very rare for accredited investors. I mean, usually these projects are still syndicated, but they're syndicated to
Higher
individuals that already have amassed an extreme amount of wealth.
Yep.
Where we are trying to keep it open to as many people as possible to give everyone an opportunity, just like we've been given an opportunity to be a part of this project.
Exactly. And so obviously, guys, for more questions about this so that we can talk in depth, feel free to reach out to us. But I think a lot of questions that I'm getting, that you're getting from retail investors right now is why would I invest into real estate right now, right? There is a plethora of headlines that say, housing market's going to crash, stock market's going to crash, and it's really hard to get accurate information. I would typically say don't look at those, legacy media outlooks because they're oftentimes it's clickbait, right?
Yes,
they're trying to get you to just watch. That's what they want. They want views. They don't care about the information. But what you need to think about is when you're investing into a fund, or if you're just a developer right now, you're not selling right now.
Yep.
You're building. And what have we seen lumber do? What have we seen cost do? What have we seen labor, right? So what have we seen all these things do? They've come down over the last several months. And, right now we're experiencing this on the real estate side and on the mortgage side. Buyer activity is picking up, right? As CPI, as inflation continues to fall, as mortgage rates continue to come down, more and more people are coming out of the sidelines, off the sidelines, back into the game, right? So having the opportunity to, build right now where lumber prices are coming down and we're not selling, inventory 3 years down the road seems like a pretty good time, right? But I know that's a lot of fears that we're getting, hit up with is like, hey, it's blood in the street right now, right? And in my eyes, and your eyes too, it's a good time to get in at the ground level to ride up those different equity waves.
Exactly, and it wasn't intentionally timed like this, obviously.
No,
but it is right now at least working in our favor. And there's a saying, when's the best time to invest in real estate, and it's last year or right now. I mean, and that's truly the case. You can't time the market perfectly, but you can attempt to take advantage of what's happening. And right now on the development and building side, we are able to take advantage of whether you believe we're in a recession right now or coming into one. It's actually that's really the perfect time to develop and build because all the costs have come down. And then when we come out of this recession, maybe it's 1 year, maybe it's 2 years, or maybe it's a few months. That's when we're actually selling homes, ideally on the way back up, and the economy's rising, the market's growing. So, very, very fortunate. We're excited that we actually have had a small correction over the last 6 to 8 months to take advantage of substantially lower costs and labor prices to develop and start building.
Yeah, it definitely helps out with our margins on the the back end of what the returns that we can show to investors. And so again, guys, if you're curious on what that looks like, what those returns are, very competitive within the space. We've taken done our due diligence to take a look around other local syndications, other funds. Very, very competitive, if not more competitive than what they have to offer. So for more questions on that, let us know. Jesse, before I kind of turn over to our kind of end point, I'm going to shift topics here a little bit. Do you have anything left to talk about, South Dakota, obviously people can Google Ellsworth Air Force Base, Box Elder, Rapid City. You'll see all the headlines. You'll see the inventory issues that they're having over there, what's going on with the military base. But anything else that you'd kind of like to tell, some of the guys that we got and gals watching or listening about our project?
Nothing more specific. Just reiterating again how excited we are. I mean, this is a once in a lifetime project in general, whether it's in our case from the syndicating and development managing side or from the capital investor and partner side. This large scale of a project in this day and age again is once in a lifetime. The second this thing is started to build out or finish building out, there probably won't be another need for the next 1 or 2 master plan communities in this area. So taking advantage of what's right in front of us is, again, very exciting for us, and a lot of our partners and individuals we've talked with and potential investors see the same excitement.
Absolutely, and I think it's fair disclosure that Jesse and I were the first ones to invest in this project ourselves, right?
Sure.
And so not only are we acting as syndicators, but we're also capital investors, and we're the first ones to jump in on that piece of land.
Not to take too much more time, obviously, because we're coming close to the end. But the other piece that I wanted to mention is a lot of syndications too, and hope everyone does their due diligence. They just deploy capital. They don't actually work or put effort into the projects.
Right.
And whereas we are going to be putting in several years, if not a decade worth of sweat equity in helping manage and run this development. So we're going to oversee and make sure it's successful and not just say, hey, we have our investors' funds and we're going to go send it here and you let us know how it goes. We're going to be there hands-on making sure it goes as we expect.
Exactly, which is, like you said, rare as a syndicator. So guys, questions on what's going on with South Dakota. For more information on GT Investment Fund, you're going to see more and more of this stuff as we continue to roll this fund out, guys. But reach out to Jesse and I. We'd love to have a conversation. We'd love to sit down, show you our PPM, show us, a little bit more deep dive of that, those numbers and stuff. So any questions, feel free to reach out. Jesse, as we end here, I want to know your thoughts. What's Bitcoin doing right now?
Oh, man, I think
it's up like 38%.
I think I have to bounce that back to you. To be honest, I've stock markets, crypto markets. I'm still a little uncertain if we have a true trend up or down. I think a lot of reactions could still happen depending on what the overall economy looks like. And to be honest, I'm invested and interested in those, but that's where, just like yourself, I'm still very much full focus on real estate because I do truly believe it's a more stable asset, whether we're in a correction or we're coming back up. There's still tons of opportunities because it's one of the very few assets that you can actually control the price of. When you purchase Bitcoin, you can really just watch and see or hold and wait for it to climb up, which I expect it to do. But with real estate, you have the ability to control the value of it. You can improve it. You can make it worse. You can change things by adding stuff. You can build on land. And that's why I am so bullish on real estate in general.
No, love that. Was just curious. So we'll have to get you back on. We'll do a deep dive on Bitcoin and crypto. So appreciate it, man. I'm sure the people already know, but tell us where we can find you.
So honestly, I think probably easiest just search my name, Jesse, Taff, or obviously a lot of these the content Bryce puts out, I'll be tagged in for the podcast and things like that. But I'd say Instagram. Best place to find me, JESSE_TAFF. And love to get a follow and reach out if you guys have any questions. And happy to sit down and chat with all of you.
Absolutely. Thanks, guys. Thanks for watching and thanks for listening. We'll catch you guys next time.